Problem 4 of financial statements. Globusnet Inc. paid $2,600 in dividends and $5,700 in interest this past year. Common stock increased by $3,430 and retained earnings increased by $1,160. What is the net income for the year? Also, can you calculate the cash flow to equity from this information? So this question is linking, providing you information from the balance sheet and the income statement, and you're supposed to figure out then the net income for the year, and then we've got to see if we have enough information to calculate the cash flow to equity. So the balance sheet portion is has to do with the changes in the equity. That tells you something about the flow of cash to or from the shareholders. We'll get into that. So now, an income statement typically looks like, in general, you start with sales or revenues, you have various costs, and then you end up having net income. Now, the net income is what the company earns. It can only go in two directions, or it can go into two pots, I like to say. One is what the company keeps on for its own continuing operations, and the second one is what it gives to its owners, the shareholders. What it gives to its shareholders, that's called the dividends. So that's paid to shareholders in the form of dividends. We've been given that amount, which is $2,600, and we know that the rest is what the company kept, and that is the addition or the changes to the retained earnings. And as you can see, we've been given that number directly as well, because it says retained earnings increased by 1,160, which means that is how much from the last year's profit that the company has kept. So you add these two together and we get the net income. That is our answer. Now look at equity in the balance sheet. So the equity position is made out of two components. One is the paid in capital or common stock and surplus, depending on how it's presented on a balance sheet. So that's how much the shareholders pay in to the company. And what we're given the information that this year, 3,430 is the increase of common stock, which means shareholders paid $3,430 into the company. Now, we know also that the equities portion is also retained earnings, and the retained earnings is the sum total of all of the money that the profits that the company has made from the beginning of its existence to the last balance sheet date, that it has not paid out to the owners, to the shareholders. It's kept that itself. That's why it's called retained earnings. And in this case, we have an addition. It has increased in the past year by 1,160. So the total retained earnings from whatever amount it was the year before, it increased by 1,160. This will allow us now to calculate the net amount of cash that was paid to, or the amount that was received from shareholders. So we will be able to calculate the cash flow to equity. So what did we get from the shareholders? Well, they increased the common stock. So they paid into the company $3,430. We already know also that the company paid dividends from its profits of $2,600. That means the net amount the company received was $830, because this $3,400 went to the company from the shareholders, and this $2,600 went to the shareholders from the company. So the net is $830 from the shareholders to the company. You can look at it from the other point of view. So in other words, the cash flow to the shareholders was minus $830. So basically, that is the answer to the second question as well. Thank you for your attention, and I hope that helped.